Well, that was quite an interesting sort of session. What did you take away from what you were hearing Jess saying there?
It's great. I think we need to all work together. I mean, I think the really big thing is about collaboration. I don't think we're building schemes. And one of the questions which came up, I was just watching up on the Rolodex up there. I think we're very open. I think from a Tizer's perspective, I think we want to work with government. We want to work with a whole range of different industry players. We want to convene groups. We don't want to try and impose anything on the sector. Our vision is very clear. We want to make sure that we are helping the financial services industry, not just banks, but also wealth managers, insurance companies, etc., to build a scheme and a trust framework that can be used. And that's the critical thing. And I think the reason why we had to convene 10 organisations together, because if we tried to do it by committee, it'd be very difficult, and even 10 is quite large. And I think certainly government has set a really good tone. It's got some great standards we can work from. So we're not starting from ground zero. Actually, we've got some really good stuff that we can already start working with, and it's critical that we are interoperable.
So talk to me about what you've been doing from a digital identity for financial services point of view. The pilot's due to finish this month, isn't it?
No, we've kind of extended it. We're building 2 prototypes. So there's 5 work streams, and I'll go through them very quickly because I'm sure everyone's probably quite hungry and not wanting to hear me rabbit on about it for too long. One is prototype, pilot development, so 2 pilots, 2 prototypes. One's live, and we can share the details of that so people can go and have a play around on it. It's very customer focused, and the critical thing there is to understand what does the customer want. A lot of customers won't know anything about digital identity, unless they've had to engage with government. So how can we make it desirable? What are the sort of use cases that we think are going to get sort of critical mass? Okay, so that's very sort of consumer facing. It's not collecting any live data. The second one, which goes live in January, is putting much more around the sort of building blocks. So how can we consume digital identity against the standards that we've devised, and I'll talk about that in a second, and how can we get people through that process digitally? So that's the second one. The pilot runs up till the end of March, and then we've got phase 2, phase 3, which proceed through 2019 to 2020. The standards side, I think one of the questions that came up was, can we share the standards? Absolutely. I mean, that's critical. I mean, Tizer is a not-for-profit, it's a membership organisation, it's got about 200 members, and there's very much a call out, not just to its members, but also to OIX members to convene around the standards and to work through them, because there's no point in us trying to devise them and then impose them. They've got to be usable. And so we've come up with a set of standards. They're slightly different to the government ones. We've worked from the JMLSG guidelines, but we've cross-referenced with GPG 44 and 45. Okay. The third part, which is the big 800-pound gorilla in the room, which keeps me awake at night, is the trust framework. And that's all the rules, all of the liability model, commercial model, etc. And we're really just starting to get into the detail of that. I think by the end of March, we'll have the skeleton of it. We've done some really good work, which I'm really happy to share. We've got lots of documentation, so please come and see me if you're interested in knowing more or participating. But the critical thing there was, putting the consumer first, which has come through loud and clear from other panels, is what are the key principles? And we took the verified principles to start with, and then we sort of overlaid those with financial services. So, for example, free to the customer, customer has choice, it's easy for the customer to onboard, or has to be, how can it deal with thin file customers? What are the different journeys that we need to build? So that's the principles, and then we looked at a range of different models of how we could deliver this, looking at a sort of single IDP, multiple IDPs, hub-based systems, and we scored against those principles. And I can share, I'm more than happy to come and talk at either an OIX event or wherever, the model that we've actually come up with and proposed that we would work towards. Okay, so it's kind of a hub-based model with a number of IDPs. The critical difference, though, which I think is really interesting, certainly for financial services, is that many financial services who are not IDPs, so other banks other than Barclays, are interested potentially in becoming IDPs. So how can we help them, under the trust framework rules, move almost across the boundary line from being a relying party to an IDP? And it does pose a lot of issues, and I'm not saying it's easy. And we have sort of looked at a long list.
You've got interesting people wanting to do that.
Yeah, absolutely. I mean, we've got sort of great take-up of organisations that are interested in being involved. The fourth part is on the technical side, and that's looking at the sort of infrastructure, the component parts, etc. We're less progressed on that, to be honest. I mean, we're going to be very technology agnostic. We're not trying to build anything within the project at the moment. It's more looking at, against the trust framework, what's the best way of delivering this? And this is certainly where we're joining up with the FinTech Delivery Panel. I don't want to steal Hussein's thunder, but it's how can we work with some of the work he's doing, potentially with the FCA Sandbox. So that's where we're sort of joining together. And then the fifth bit is the business case, and that's how do we deliver it? What's the current state? How much does it cost organisations to onboard, dealing with KYC for IDNV? What's the cost savings? And what's been really useful there is working with people like Bank ID, Norway. So they've shared a lot of their information and data to give us a sort of sense of, what's the current state we are in now and how do they get to where they are. And I thought what was really interesting was a very big point was it's less about the cost savings around the KYC that you should be looking at for the business case. It's much more about the new services you can build. So they gave a great example of, if you want to apply for a mortgage in Norway, you literally just put thumbprint. You go through your application, but for the ID&V, or the authentication, the thumbprint put thumbprint on your phone, and it will go off and it will pull all the information back together, and it will give you an offer within about 30 minutes without any human intervention. So that gives you a sort of sense of and we're not there yet at all, but that's a sort of a golden path. That's where we're looking at going.
What have you learned so far?
How long have you got? What have we learned? There's a lot of issues that arise from this. I think actually one of the points which, fun enough, that David picked up on around things like attributes. In the UK, the attributes and the mapping process is reasonably similar, but what we can't do for the standards is try and provide the standards for every single use case from the get-go. So what we've decided to do is look at 3 use cases, which is opening a bank account, current account, retail current account, opening a pension fund, and opening an ISA. So let's contain it, and look at what are the attributes that are required to deliver that, and where can you get those verified, validated, what anti-impersonation things do you need to have put in place, what flags do you need to put in place in the system. So that, I think, was really one of the sort of key findings. And I think to the point which David, you didn't pick up, but on the European side, one of the big things was it doesn't map well across Europe. So many of Tysers' clients are international, by their very nature. Obviously HSBC is as well. So you're trying to sort of, you've got a regime in the UK which is gold-plated when it comes to KYC, but other countries might be less scrupulous with their identity credentials, or they may just not have credit reference agencies. So it's kind of how do you deal with those sorts of things? There's a long list.
So what would you say are the drivers for having a digital identity scheme for the financial services sector? I suppose you're talking about things like security, cost savings, obviously, new product development. Yeah,
I think you've answered all of those there. I think one of the critical things that we have put into the first prototype is kind of what's the customer sort of value. And I think we've always got to go back to the customer. It's all well and good building a scheme, but unless people use it, then it's going to be dead in the water. So we looked at desirability, we're looking at security issues, kind of what are the big drivers, and I certainly put it out to OIX members. If you've done any research, and LexisNexis very kindly shared some, around, is it a security message you want to put on the front saying, by using your digital identity, your identity credentials, you'll be empowered of your identity, and it will give you a lot more control? Or people don't really care about that in the moment, they just want to get through the path quickly as possible. So actually it's all about ease of use, access, those sorts of things. And those are the critical things that I think really help drive the market, and that's what we need to get to. So we're doing lots of research on that side.
You had a meeting with GDS and DCMS recently, and there was a question that sort of came up saying you seem to be creating a sort of almost a competitor to Verify. So what did you discuss in that conversation with GDS and DCMS?
We've had multiple conversations with GDS, Treasury, FCA, other membership organisations, FDP, etc. I think the critical thing with Verify is they've got a great set of well-tested standards, but it doesn't naturally transpose automatically onto the financial services sector. It doesn't deal with AML. And also there are certain things in level LOA2 which we probably don't need for financial services, things like activity history. So what we need to do is almost sort of decompile what they've got, which is what we did in our standards work, and look at a sort of national standards basis, which I think is where the real interest is. The consumer doesn't want to have an identity for financial services and then one for government and one for health. They want to be able to port it across and be in control of it and know where their data is going. And those are the critical conversations that we are having and will progress with GDS and other government departments.
Okay, I'm sure there'll be questions sort of, that we can tackle. Hussain, tell me about the FinTech delivery panel and the portable digital identity pilot.
Yeah, of course.
What's the sort of background to it?
So we, as part of Onfido, we started the company 6 years ago. It's focused around identity verification, taking your government ID and facial biometrics and turning it digital, essentially, for an onboarding journey. And we were involved as more of an observer over the last 6 years on many discussions around a portable digital identity. So on the FinTech delivery panel, it was set up by ACM Treasury, and there were a few areas of focus. One of the key ones was around a portable digital identity. So the group was set up, and with a focus around starting a pilot in 2019. And so we have had with a series of partners, banks, fintechs, and others, specifically the innovation teams, around what are the steps necessary to get to a pilot and learn as you do, so to speak, and building upon all the terrific work that Harry has mentioned over at Tizer, security documentation, privacy, and so on, but not necessarily restricting it just to one approach, be it a database or otherwise, but setting up a series of consortia so that different approaches can come and experiment with regard to how can we best put all the building blocks together to make it work. So that it's not necessarily centralized models, it's sort of your Evonyms and your Uports and your hybrid models. It could be a Signicat, and all of them are coming together to form a different consortium. Each consortium would have relying parties, their approach, their perspective on what standards are likely to work. And then the FCA is now accepting applications for us to start in early 2019, so that as each, I suppose, consortium proves out how their model is likely to work, everyone can learn from that and get towards this ultimate state on solving this problem once and for all for the UK. So the specific, I guess, endpoint is a shared goal amongst all the different groups working on it, but our specific focus is around getting to testing with real customers as soon as possible so that we can learn as we do.
The documentation I looked at sort of said that the 2019 Q1 go live for a pilot was ambitious, was the description. Is it too ambitious?
Not necessarily, because we can comfortably go for another 5 years talking about it. So I know that there have been many terrific white papers produced, but the first thing we decided in our first meeting was that we weren't going to do another white paper just because there's nothing to contribute. It is well thought through. It is not. It may seem complicated, but this portable digital identity has been done very successfully now in more and more countries, and that it may give the illusion of progress if another one is produced, but it doesn't necessarily mean it's progress. Progress is having actual people having a digital identity, taking it to relying parties, and showing the workflow, essentially. And the building blocks to that, there's a technology piece, as has been mentioned a few times. There are different approaches. The majority work and work quite well. So that's kind of been done. There's a partnership component, and that is just different relying parties getting together with different models. And then there's a policy and regulation side to it as well. That one brings up the liability question, which again is a continuous theme. But again, that does not in any way have to be complicated. It's a question around you have a auditable standards, you have an operating model, you have a liability model. Everyone agrees what that is to be. More often than not, it's the identity provider that underwrites the liability. And what they're underwriting is the fact that they have carried out these certain pre-agreed checks. And that's sort of the end of it. And Gov.Verify proved that model to work very well. So it is a collaborative approach is needed. And there are issues or challenges whereby if it's a government-only initiative, although it provides very many benefits, the challenge could be the frequency of use. So that it's not necessarily if it's just for the public sector. Then from a consumer perspective, you want to engage with that sort of service more often than just once a year or twice a year. If it is, as Harry mentioned, I suppose from a banking perspective, if a bank is to become an identity provider, that is a natural way to do so. But then the question arises, if there's a liability question as part of it, to what extent can a bank be sure of those individuals, whether they are who they claim to be? That can be resolved with a quick step up, and there are other approaches to do so. So it's not impossible. It's not easy neither, but it's very doable. And so to your question, the focus has been very much outcome driven. And from the outset, we said it absolutely has to be Q1 of 2019. Because there comes a point which you set a deadline and you say, anyone who believes that we can do it in 2019, please attend the meetings. And if you think it's not, then there are many other meetings for you to go to.
Right.
And the challenge becomes there's probably 1,000 reasons why this can't work. And there's probably one or two paths by which you can make it work. So if all those who are interested in thinking through how we make it work, please come along. And so that's what we've got to.
And what would the timescale be after that then? So let's say you hit that, what happens then?
So all these different tech providers, they're building and then they're setting out essentially their rollout plans. So it depends what you mean by work. So there's a case of getting buy-in from GDS, DCMS, all the others on, and obviously with the FCA overlooking everything on which models tend to be the ones that prove themselves the most or seem to be the most effective. There are, broadly speaking, most are in agreement on what the key building blocks are. When it comes to standards, there's a few nuances as to whether database models alone, relying on data, is sufficient, or would it be an added bonus, or are there other approaches, physical identity documentation, be it checking with the passport office or others, is that necessary, is that sufficient, and these things, which will be, I guess, proven out over 2019. But the question on it working and what would come next is essentially a working prototype model that can then be expanded, whichever model works out best.
Okay, let's take some questions from the floor.
The Money Laundering Directive and the JMLSG guidance that derives from that, it doesn't have a standard as such. It's a risk-based model. Each individual financial institution does what they think is appropriate for their customer and for their context. So there's no standard, and that's part of the challenge. And one of the benefits, in my opinion, from government setting standards is that there's something we can now point to. Often people say that those standards are very high and they're difficult to achieve, but that's actually probably a positive thing. If we have a high standard, it means it's there for a reason. So what is driving TESA's standard? What is the objective of setting a new standard?
Thanks, David. I mean, the critical thing is data minimization, really. The customer needs to only provide the bare essentials that they need to do to get through the KYC AML checks. That's the sort of critical thing. And we did rigorously go through the different LOA standards that obviously you are very well and very familiar with. And when you see them, they won't be hugely different. You'll just find they are, the differences are slightly in the nuance of, what are the different bits of data information that are actually required to get through the process. And one of the critical things that we're doing at the moment with the standards is actually taking them back into the participating organizations' AML teams to say, if we present an identity which hit all of these data credentials and flags and what have you, would you accept it? Would you onboard it? And one of the critical next steps for us then is to then take it out to a much broader audience. So I would certainly put a call out to those relying parties in the room, financial institutions who are responsible for certainly consumer ID&V, to come and vet those standards. And we'll probably put them up on GitHub and share them, so people can go off and actually have a look at them. But the point being, I think with LOA 2, it set it just slightly too high because there's certain things like activity history which probably aren't required. But I think going back to Jess's point, and certainly some of the conversations we're having with GDS, is we need to make sure that they are interoperable. So that, from a standards perspective, you've got certainty in the market. So that's kind of the main driver behind it.
If I were to just add one point in that, they seem sufficient to be able to have a regulatory compliant shared identity system, whereby wherever we land between 1 and 2 is quite important for it to be standardized across all the different industries, not necessarily a unique one per industry, to simplify and streamline the way Jesse mentioned across everything, basically. And the one piece of change has already happened, like as far as last December, JMLSG changing the requirement for it to be in-person to face-to-face. So when you can go from in-person to face-to-face in that specific word, that means face-to-face can be digital, can be purely online. And then there's no need for it to be specifically in-branch, which is the main requirement that essentially unlocks the potential for this all to work.
Okay, we have a few points here, and I'll read them out. Doing identity to a worse standard is easy, though is this really in the user's best interests? Shouldn't TISA be contributing to commercials for good ID? Does TISA's approach risk the whole digital identity ecosystem by pushing for new LOA standards which will take time to agree and become adopted by IDPs? And then on the Onfido solution isn't reusable by the consumer. Should your tech be put in the hands of the customers, not the relying parties? So could you address some of those points?
Yeah, of course. So correct. We don't have any sort of shared identity platform. We contribute to a few of the shared identity platforms, but there's a wide range, and we only play a small part in some of them. And we're advocating for a standards approach, so that if it's a standards approach, I mean, a critical thing for this to work out once and for all is for there to be competition and for there to be different approaches, and whoever adheres to those standards and is essentially determined by a tech provider or a relying party is chosen accordingly. And it's quite important. Back, I guess there was a question around China and others around the user privacy piece, where there are benefits to an identity provider being separate to a shared platform and so on. So if you have a decentralized approach, it's not just necessarily potentially more secure, but then you don't have any monopoly powers either.
You happy to sort of take some of the questions? I mean, you're being very sort of collaborative in terms of asking people to come and talk to you. There's obviously some issues there.
Doing identity to a worse standard is easy, though it is really in the user's best interest. Shouldn't try to be contributing to the commercials for good ID. Well, I disagree that it's easy, number one. And secondly, it's not necessarily to a worse standard. We're thinking very much from the consumer's focus. So what's the minimum data they need to part with? And that's one of the fundamental principles for this. So I would disagree with that point. Whoever's written it anonymously, I'm very happy to come and have a chat with me afterwards. I'm not sure, was that you, David, or no? I can see you grinning. I'm pretty sure it was. Does Tysers' approach risk the whole digital identity ecosystem by pushing for new LOA standards? Well, I think the thing is we need to be, we can't assume that the current IDP status is going to remain the same. There are IDPs, they're verified IDPs. We do need to work with industry, including IDPs, to map against the standards against their systems to see how easy they can accommodate them. But we've also got to take, you've got to take progress in mind, and also think about other organisations who want to become IDP. So they might not have legacy systems that are configured in such a way to meet the verified standards. So I think that's a conversation probably to be had in a workshop. And I think one of the big call-outs Hussein and I were talking about is, and I throw this open to the floor, would we benefit from having a OIX-led, for example, relying party workshop where we can present some of the work that and results that we've found to get more relying parties engaged with this? Because we want to present a very sort of joined-up approach, and we want to make sure that we are building something that's a benefit to industry and obviously the consumer as well, rather than people thinking that we're doing stuff in silos and behind locked doors. With that, and I guess maybe to throw that open to Sue and crew to manage that.
Okay, yeah. One last question. It says, if Tyser want banks to be IDPs, why doesn't the new LOA use bank data rather than rely on CRA data, or at least use both?
Well, a lot of the CRA data comes from the bank, so there's a sort of circularity there, and I think that's, again, a conversation probably to be had. I think, you think about banks, there's 73 million bank accounts in the UK alone. They've got huge amounts of data on people. That data is going to be up to date. Maybe that's something that we need to consider. Absolutely, I think that's an interesting point.
And one last point at the end: are the large banks going to act as IDPs or relying parties, or both for these pilots?
Do you want to take that one first?
So I guess Harry and I probably would say the same thing, in that they could be both, I suppose. Yeah. But specifically around credit bureau data, using banks' existing data. I mean, we currently have a shared identity ecosystem. Credit bureaus facilitate a shared identity ecosystem. There's a question around of the extent to which the level of assurance needed, and so if an individual's opened a bank account 30 years ago, to what extent is that up to date, and so on. So that if it is being used to underwrite a digital identity ecosystem, there needs to be a certain level of assurance, and not necessarily that this person exists, but they are the same person who is the bank owner, which again isn't a problem that can't be overcome. But there are challenges to do so. And it's in a similar way to a previous question around Google and Facebook and others doing it, it comes to a point at which, from a consumer perspective, privacy is pretty key. So technology now enables us to get to a state whereby it's actually ultimately the consumer who owns and controls their own legal identity. So they may have some sort of encrypted app or some sort of method or means by which the consumer decides which businesses they want to share their identity to, and ultimately they are in control of the whole process. So that whether it's breaches or questions around privacy, and all these can be resolved with the technologies that already exist or now exist, having not been available before.
Okay.
Good point, well made.
Okay. Thank you very much. I think we'll draw that to an end. I'm sure people will want to talk to you,
Absolutely.
A bit later on at lunchtime. So, and no doubt you might be speaking to Don at some point as well. So, Absolutely. Thank you very much.
Thank you.
We'll end that session.